Hello there, Maverick Currency traders. This is Rob Reinhold. I'm joined by Ankit Sharma. This is the Currency Room. Let's get into it. We are smack dab in the middle of May. In this session, we're going to be talking about what happened this week. We had two central bank meetings. We're going to go through all of the currencies, score them from +3 to -3, and then we're going to pair up the strongest against the weakest. And right now, cryptos are definitely the strongest.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
The big story in equities is that we are seeing volatility fall, and we're getting back to a more normal market environment where we're seeing moves of +1, +2% a week. Before, we were seeing moves of +5, +7, or -5 and -7%. So we're getting a more normal action, and everything's calming down. So all of the asset classes are calming down, except for crypto. Crypto had its biggest weekly gains of the year. Ethereum had a monster week this week. We also heard from the FOMC, and they came out and they said, we are going to probably be a little tighter than you thought. It was actually a hawkish speech by the central bank. And I think in a market of 3 or 4 weeks ago, it would have caused us to be down maybe 2%. And the market really shrugged it off. We also heard from the Bank of England. They cut rates this week. No real surprise there. That was expected. But we did see the pound was actually the strongest currency this week. Ankit, that FOMC meeting, did that surprise you in any way?
Not at all. I mean, I must say that was just exactly how I had anticipated it. I think we are in, the Fed is kind of in this box here. The wait and see approach is, I think, exactly where things are. Economic data hasn't really weakened. Market sentiment has weakened, but market data hasn't really weakened as much. So I think we are in this wait and see approach. And we often see, the people get ahead of, this trade. And we've seen this happen with the dollar as well, where dollar really weakened. I think now we're just kind of seeing a bit of a calm and, more like, hey, maybe not advancing as much, maybe not dropping as much. I think that's exactly where we are in the markets, and that's exactly how the broader markets are doing as well. We are in this sort of a sweet spot where things are stabilized, and I think we kind of evaluate and see where we go from here. But yeah, that was a bit of something that I had totally expected.
And if you remember, early in the year, the market expected 3 rate cuts. There's no way we're getting 3 rate cuts this year, at least in my opinion. Unless something changes dramatically, I think we get 0 rate cuts this year. But the market is dealing with it okay, and it's probably one of the reasons why the dollar has stopped falling. Let's go into the economic reports of last week. We had a good report out of New Zealand about their employment. Guess what? The Kiwi didn't really react to this. When there's good news and the asset doesn't go up, it's telling you that no one believes it, or at least it's already factored in, not a mover here. We also had employment out of Canada, mixed report, no real movement in the Canadian dollar either. There really isn't much out there other than this inflation news out of Switzerland. Again, it didn't really hurt the Swiss franc. So we saw a couple of news pieces, but nothing really moved the markets. And sadly, I think that's where we are in Forex, is we are at a stagnation point. There's much better plays out there in crypto at the moment. Forex is just stagnating. Let's go through the numbers last week. S&P down a little bit. World markets down a little bit. Gold and oil, nice weeks, but crypto, monster week. That's on the basket, but we're going to jump in and you're going to see that big gains in Ethereum for the week. Looking at the S&P, we had this big move down, this downtrend. Once we broke out of this 5,500, where it was some resistance, we came up and we now have spent 6 days above the 50-day moving average. This is a high base here. This is a base. This is a really strong pattern. For me, I don't want to be bullish, but guess what? I don't choose whether to be bullish or bearish in equities. The market does. My rule is above the 50-day moving average, I'm bullish. Below, I'm bearish. It has treated me very well throughout all of the decades I've used it in trading, and I'm not going to abandon it. So we are mildly bullish in equities. We take a look over here at the movement in currencies. It's pretty depressing because you just look at this right here. There's virtually no weekly movement whatsoever. And we're going to see this when we get into the scoring. All the things that used to be +2, +3, they've backed down to a 0. All the things that were at -2, -3, they've bounced up to a 0. It's where we are. The question is, when is the movement and the trends going to come back? We just don't know yet in the world of Forex. As you can see, the pound was up the most, CAD down the most, not a real big week whatsoever. This is where the action was in the crypto market. Ethereum up 28% on the week. Bitcoin up 9%, and it's like, oh, Bitcoin hardly moved. That's a monster move. 9%, but but compared to the others, it was the underperformer. Let's go and take a look at some of the other charts and other markets. This is the US bond market. It is flat. That is the recurring theme. Everything's calmed down. Everything's flattened out. Everything is looking for some direction here and is really mostly sideways, except for this chart here. This is just a beautiful high base breakout here over the last couple of days. Looks amazing. Looks amazing. We're running into some resistance levels, so it's probably this run's probably over. We need to wait for either a base or a pullback to finish before we can get really super bullish in crypto again. Next week, let's take a look at the economic reports. We've got employment out of the UK on Tuesday, followed up with CPI out of the US. This is probably going to be the biggest report of the week. We'll have to wait and see what it is. The inflation numbers have been coming in much lower than expectations. It's supposed to come out at 0.3. I think it's going to be a little bit lower than that, but we will see. We have employment out of Australia on Wednesday, so if you're trading the Aussie, make sure you are aware of that. And other than that, I don't see anything really all that important. Maybe consumer confidence. That's been a nasty number, but it's been nasty for a while, and now the market is kind of brushing off those bad consumer confidence numbers because all the other numbers we're getting are actually still pretty good. So let's go ahead and kind of wrap up this week's outlook. Slightly bullish. That's where I am in equities. Ankit, what's your call on equities here?
Yeah, I'm kind of the same boat here. I think we're cautiously bullish. That's just the way I think we are. We are not in that same environment that we were where we were making lower highs and lower lows. Now we actually are more stabilized, and in this price structure, we see basis that comes along, and I think that's really where we are at. We are positive on the scoring for the trend. I think we just in a consolidation phase. But at this point, if I have to really take a bet, I'd rather be playing more to the upside than the downside. It's just because that's really where we are as far as the direction goes in the market. So I think being cautiously bullish is the right play here. We don't want to be more aggressive because the percentage is much smaller. So we might take a little bit longer to break out. But I think overall, being mildly bullish is really where I want to be.
Yeah, totally agree. And when we jump into the Forex portion, you're going to see that, the bullish currencies aren't really acting all that bullish. So that's the problem when you take a look specifically at the Forex market, is that we're seeing some bullish price action in the equities, but we're not really seeing it in the risk-on currencies. But where we are seeing it is in crypto. And we became more bullish once we broke out of this long-term downtrend. We came up and based. And I said, Bitcoin, like, hey, look, I don't know when it's going to break out. Well, I didn't even know if it was going to break out. But I said, this kind of price action usually leads to a nice breakout. And sure enough, nice breakout on Bitcoin. We had a run. We had a pop. It might have a little bit more left in it. I'm not going to be participating in any more run. I'm going to wait for a pullback or a base to take a new position. 108 is its all-time high. So I think we could make it up there. That's only about 5.5%. That's not very far away on Bitcoin. I think we could creep up to that level before we back off. But any backing off down here back to the 97,000, 98,000, I think is a good buying opportunity. Bitcoin Cash did the same thing. Nice breakout, but gave us a nasty upper wick, big pullback off of that explosive move. So it did not hold its gain. So I actually don't like this one as much. And here we have Ethereum had a big, huge candle and actually added to it. We'll see where it closes, giving us a little bit of a wick here. But it's just telling us, look, we had the pop, we had the move. We're likely having to sit back and wait. You can see that Litecoin has been the laggard here. It barely moved above moving averages. It broke out, and look at this breakout. This is not a breakout like we saw in the other three. So I think Litecoin is the one you want to avoid. Anki, will you go ahead and take us through Forex?
Absolutely. Well, let's just start with the USD. And I must say that this is a week where we see an improvement. Remember, since the market sort of bottomed out, like even like a week before that, like dollar just been very weak. And we've been in the consolidation phase. And with this consolidation phase, either we can break down lower or we can slowly kind of carve out a bottom and could go higher. And I think we're seeing the latter over here. We are above that 20 moving average, below the 50. I think there is room for some recovery in the dollar. And especially after the FOMC, we saw that consistent sort of a run after that. So we're seeing things sort of getting a little bit better. So I think the dollar probably stabilize here or even go higher. So I actually like the risk to reward on some of these dollar currency pairs. I do like dollar a little bit to the upside. You can see even the velocity. It didn't really raised all that gains. It's kind of holding on to those gains. So this is again, I think we could get a continuation going into next week. And if you take a look at the yen, this is one of the reasons why I like it. Remember, we talk about this whole correlation between the dollar and the yen. And if you look back in history, every time, if you see the dollar really struggling, those are the times when yen was actually outperforming. I'm seeing a different sort of a trend here. You can see now, especially in the past week, we got a little bear rally, and then we kind of sold off that bear rally. It is showing me a lower high and a lower low, which again, trend score is now a -2. And I think that's one of the reasons why I think there's a rotation happening where, we could see the money coming out of the Japanese yen more than compared to the USD. So I do like the trend change in this yen here as well. And again, as markets sort of stay where they are, or mildly stay, go on the bullish side, we probably see a more continuation of this pullback. Remember, these are the ones that did the best in that market sell-off. So this is again where I think they will come off from those highs much more swiftly as well. So I do like going to next week, dollar on the long side, but then yen onto the short side. Now, talk about things that are kind of going nowhere. That's Swiss franc. And I must say that Swiss franc doesn't really make a whole lot of sense from a lot of different perspectives, talking about correlation, talking about risk on and risk off. Like this thing is just going sideways. And until it really breaks one way or the other, I don't really even care to touch it, because this is the one that could get you frustrated because things are not moving on continuity. I mean, there's a 1 day up and a 1 day down, but even that, the range is so small. So not interested in the Swiss franc here. And then if we go into the euro, kind of the same thing. I mean, euro is also kind of giving small percentage. It's not really breaking down. It's not really breaking out higher. They're giving a trend score of 0. So things went that out of 0. I don't really, unless they're giving us a good percentage move, I don't want to be touching those. So those goes on the shelf here. And then here we are with the British pound, and that's doing a lot of it better. And based on the price where we are, when we are getting towards that prior resistance, we can easily sort of play a breakout going into next week. And especially if you compare this to like pound against the yen, I think makes a very good pairing. So I do like pound in the European currencies front. Now let's go into some of the growth currencies. So starting with the CAD here, you can see that CAD is kind of gotten sideways to even slightly weak. And I must say that for the longest part of this year, we have seen dollar done, outperformed the CAD. And in the last month and a half, I think CAD has taken over and performed better against the dollar. And I think that could change here as well. While the dollar is sort of carving out a little bit of a bottom and wants to recover a little bit, the CAD kind of stays weak. So I think this is probably an opportunity where CAD can remain weak and dollar kind of sort of take over there. So I'll be taking a look at some of the Canadian dollar crosses going into next week as well. I do like it a little further to the downside. But keep in mind that trend score is 0. So when you're building expectation and your strategy, keep in mind your aggressiveness on that strategy based on that trend score. So here we are with the Australian dollar. And I must say that this thing looks kind of similar to the equity markets. This thing is going sideways, making a bit of a base. So we are right below, stuck between that 20 to 50 moving average. And this is where it's not really making new lows. I don't really love as much on to the downside. But at the same time, it's not really a great screaming buy either. But if it does break above the resistance, that's where I will set up my alert. And if the currency basket is breaking that resistance, I think that would be a green go signal to go long some of the Aussie crosses. So I do like Aussie here, but velocity wise, not as much. Trend wise, it's a +1. But pay attention to those percentage moves. When they are so tiny percentage moves, there's not much to be extrapolated from on a day-to-day basis. So we'd rather wait for breakouts to happen there. And then we talk about the Kiwi here. Well, you can see that the Aussie and the Kiwi also sort of go back and forth with their relative strength of weakness. And right now, we're seeing a better score in the Aussie. The chart setup is better in the Aussie compared to the Kiwi. It's the same thing. Kiwis also have a very strong resistance level that has been tested like 4 or 5 times, and each time it just rejects. And we just saw that rejection just 2 or 3 days ago, where it got above close to that resistance and just quickly got down. So this is again just telling me that until it really breaks that resistance, don't really want to be jumping on the long side. But at the same time, you can see that it's not really breaking down lower either. So whenever you have currencies that are kind of stuck in that very tight range, it's better for them, for us to kind of leave them alone until they really start to break out one way or the other. So I think that's really where we are in the currency markets.
And if we stack everything up in our trend and velocity score, cryptos are the clear outperformer here. But as I said, they don't have a ton more upside left. They just had a huge release after a 3-week-long base. Bitcoin might make it up to the 108,000 area. That's only 5.5%. That's not a huge move in crypto. I usually like to get 5 to 10% in a crypto move, and it's just not quite there. So I'm waiting for some backing off, some basing, and then I would be much more interested in buying Bitcoin after it broke out of 108,000 after some consolidation. If we pull back, you know what? That's a different story. I'll look at it then. If we look at just Forex here, you can see there's really just a few choices. Pound is a +2, and dollar and yen are -2. But I'm with you 100%, Ankit. I think that dollar starts to move its way towards a 0 on the trend score. So that really only leaves pound against the yen as a trade. So we'll look at that one. In the short term, the pound has a lot of momentum, and the yen over there has some weakness. So look, pound yen is a trade that I want to take a look at. And Ankit, I'm also with you. I think that dollar yen trade looks very interesting as well. I will go ahead and start with pound yen, and I'll leave dollar yen to you, Ankit, since that was your trade. Let's take a look at it on a daily chart first. So here's our daily chart. You can see here, pound yen has been pretty much sideways between a range of 186 to the downside and 198 to the upside. It's a big enough range. We have momentum here at the moment on the daily chart. We do have a little bit of resistance right here, but after that, really smooth sailing up to about 196. So I think the daily chart supports the trade here. We go here to the 4-hour chart. Everything's looking good here on a 4-hour chart. We just had a pullback. We just had a nice bounce. We should break out from this level. Again, bull pullbacks say that it should make a new swing high. I like this one here. I think you can buy it. Yes, is there a little bit of resistance here? Absolutely. That doesn't cause me any hesitation. If you are worried about it, take a half a position now and then take a half a position later. Take a half position now, and then if it fails and this does hold resistance a little bit, well, guess what? You got plenty of time to sit through that if it is going to break out to the upside. But if it doesn't sit, you take a half position and it breaks out, go ahead and grab your other half, and all the way up to 196. 190, let's call it, 195-ish, somewhere in here. I think that is going to be the next target for me. So I like this pound yen. I like it right here. I think it's good to go. Did you want to go through dollar yen with everyone?
Absolutely. I think again, the pound yen is a great setup. But then here we are with the dollar yen. Like I said, I mean, we start with the this daily chart, and you can see that the exponential moving average is now more on the upswing. We got the parabolic SAR kind of kicking higher as well. RSI is kind of kicking higher as well. So we had a nice little the 2 days, and then we get a little pullback here. Again, I want to be a little buyer on the pullbacks, and then use again 4-hour chart. Let's say for our trade, you can see that with 146 is the level of resistance. We are pulling back towards that 145. I think it's worth sort of a shot here. See if it bounce off that exponential moving average and breaks out towards that 146. And again, if it breaks above that, I think we can easily get towards that 148 area. So there is that room for that to run, before it really run into any sort of meaningful resistance. So this one again, it's all about timing and what the dollar does. This is the one that I like. The one here. Here's a couple of ones that I do like elsewhere as well, other than the yen currency pair, is the dollar CAD. Remember, same thing, same concept. Things are kind of recovering here. Take a look at that one. Start with the daily chart. You can see that this thing was below that 13 exponential moving average for quite a bit of time. And I always like to use that as sort of a momentum. And you can see that as soon as it broke above it, the downward momentum is over for me. I think this can easily climb towards that 140, which will be the first sort of a milestone. As you can see, on daily chart, we're seeing the RSI picking up as well. So suddenly that pair was sort of kind of going nowhere, is now picking up some steam. So this is the one I like it, even on a 4-hour chart. We're seeing this holding it gains, and I'm making a nice little high base pattern here. So this is again goes on the top of the list for me as well. Now, outside of that, there's only one more, is the Aussie CAD. And it's again same concept. If Aussie does, and again, let's go on the daily chart, Rob. Like once we break, let's say if the Aussie does break, we are seeing a sort of a consolidation in Aussie. If it does break, as you can see that this is just slowly gathering energy. So these are the parts I find is the hardest one. Just like what we saw in the crypto market. We had a 3-week consolidation, we broke out. And when that consolidation is there, that's the hardest part, because you want to make trades. But then if this consolidation is happening and it's a tight range, well, that's the time where you just got to be patient and wait for those breakouts to happen. I think that's really where I am at, is I'm not really finding it something as tradable, but at the same time, I'm just waiting for those breakouts to happen, because I think that's where the next big opportunity is going to be. So I see opportunities. I think it's just a matter of looking at the right thing at the right time. Set up those alerts, find out when things are breaking out, and just entering it. That's the best way to play these markets.
So that is the name of the game here. We got some consolidation. We have a few currencies that maybe look like they're going to move, but the vast majority of them are in a consolidation phase. In consolidation phases, what you don't want to do is make a bunch of trades, because that is going to lower your capital. You're going to take positions that don't really go anywhere, that don't have any momentum. You're going to get stopped out for small losses. In 2 weeks of consolidation, someone who's clicking a button actively, they might go 2 for 10 as far as win-loss in this period. And then when they finally do get a move, they're either gun shy because they don't feel like they're a good trader anymore because they just went 2 for 10, or they have taken such a big drawdown that their next position is not going to be a very big position, because again, they've chickened out because they've just gone through this bad period where they think, oh, I'm not a good trader, I've got a low win-loss percentage. No, you were just trying to trade in a crappy market and you weren't in the right stuff. So if you could notice that there's consolidation, automatically just pull back, say, I'm going to make less trades until this trend changes, then I'll start to make more trades. You can still make trades, but just be very thoughtful about them and think about, hey, this might take a couple days to churn in this range. Like that Aussie CAD, I agree with you. You could be in that churn for 4 to 5 days. Don't have a stop too tight and be patient. Let that thing break out and pop to the upside if it's going to. But do not have a tight stop. You are just asking for a loss on that position. All right, everyone have a great weekend. Goodbye.